Welcome to the World Wire Update. Don't forget to subscribe and click the bell icon for more updates and thrilling short scenes. A tariff is a tax on imported goods, often used by governments to control the flow of products across their borders. It's a tool that can shape entire industries, influencing what people buy and where companies choose to do business. By making foreign products more expensive, tariffs are designed to protect local industries from overseas competition. This means that domestic companies can compete more easily, but it also means consumers may pay higher prices for imported goods. When China announced a 75% tariff on US-made electric vehicles, it wasn't just a minor policy change. It created a massive financial barrier, sending shockwaves through the global auto industry. For every American EV shipped to China, the price jumps dramatically, sometimes doubling or even tripling, making them unaffordable for most Chinese consumers, and putting them out of reach for the average buyer. This move effectively shuts American automakers out of the world's largest car market, a place where millions of vehicles are sold every year, and where growth opportunities are enormous. Companies like Tesla, Ford, and GM now face losing access to a market with huge growth potential, forcing them to reconsider their global strategies and future investments. The tariff is more than a tax. It's an economic weapon in a deepening trade conflict, signaling rising tensions between two of the world's largest economies and raising the stakes for businesses on both sides. American automakers must now rethink where they build and sell their cars, possibly shifting production or seeking new markets to survive in this changing landscape. The ripple effects will hit factories, workers, and consumers back home, threatening jobs, family incomes, and the stability of entire communities that depend on the auto industry. In today's global economy, a single political decision can reshape an entire industry, changing the lives of millions and altering the course of international trade for years to come. The 75% tariff is the latest escalation in a long US-China trade war. This trade war has been marked by a series of tit-for-tat measures, each side trying to outdo the other. It began with US tariffs on Chinese goods, citing unfair trade practices and intellectual property theft. The US accused China of stealing technology and forcing American companies to share their innovations. In retaliation, China targeted American exports like soybeans, hitting the heart of US agriculture. This move was designed to hurt American farmers, a key political base. The cycle of tariffs has only intensified, with both sides using more targeted measures. Each new round of tariffs has escalated tensions further. The US now blacklists Chinese tech firms and threatens tariffs on Chinese industrial machinery. This is part of a broader strategy to curb China's technological advancements. In response, China has hit back at high-value American industries, especially electric vehicles. This sector is crucial for the future of both economies. China also imposed export controls on machinery needed for US EV battery production, aiming to disrupt the supply chain. Both nations are now targeting the industries of the future: EVs, advanced manufacturing, and tech. These sectors are seen as the battlegrounds for economic supremacy. The goal for both sides is clear: to slow each other's industrial ambitions and gain a competitive edge. The 75% tariff is a clear sign that the economic rivalry has entered a new, more confrontational phase. The stakes are higher than ever. The stakes for both economies have never been higher, and the world is watching closely as this trade war unfolds. China's tariff on American EVs is a calculated strike at a symbol of US industrial ambition. The US auto industry is betting big on electric vehicles, with government support and massive investment. By targeting EVs, China hits a sector critical to America's economic future. Meanwhile, Chinese EV makers like BYD and NIO dominate their home market and are expanding globally. The tariff protects Chinese brands and asserts China's leadership in EV technology. It's also a direct response to US actions against Chinese industrial equipment. The message: for every US move, China will retaliate in kind. American automakers depend on Chinese battery components and equipment. By blocking US EVs and restricting battery tech exports, China maximizes pressure on the US auto sector. The EV industry is now the main battleground in this trade war. The 75% tariff is a financial gut punch for American EV makers. Tesla, Ford, and GM lose access to a huge market, threatening billions in investments. US-built EVs are now too expensive to compete in China. This means production slowdowns and potential job cuts at American factories. The impact ripples through suppliers and local economies. Automakers may have to rethink global strategies, possibly shifting production abroad. Investors and executives face tough decisions as growth projections shrink. Even US car buyers could see higher prices as companies try to offset losses. The entire American auto industry faces a period of uncertainty and instability. As the US escalates its trade war with China, Canada is considering dropping its own tariffs on Chinese EVs. This would mark a major split from US policy. Canada's move could reopen Chinese markets for Canadian exports like canola and pork. For China, it's a gateway into North America for its EVs. If Canada becomes a tariff-free zone, consumers there will have access to affordable Chinese electric cars. This would increase competition and pressure prices for American and other foreign brands in Canada. Tesla could resume importing cheaper models from China to Canada. The US may see this as undermining its trade stance, risking new tensions with Canada. There's also concern that Chinese EVs could enter the US through Canada. North America is now divided by two very different approaches to global trade. The Chinese tariff lands on a US auto industry already under strain. Global supply chains remain fragile after years of disruptions. China's export controls on battery equipment threaten US plans for domestic EV production. Battery costs are rising, and supply constraints are getting worse. US automakers may have to pay more for materials and equipment, driving up EV prices. Semiconductor shortages are another major threat, with new crises forcing production cuts. Many essential chips are made in Asia, and trade tensions only worsen the problem. Tariffs and export controls disrupt the flow of parts, risking factory shutdowns. Smaller suppliers and startups are especially vulnerable. The dream of affordable mass is colliding with a fractured global economy. Automakers must adapt quickly or risk falling behind. The 75% tariff and rapidly shifting trade policies have thrown the future of American electric vehicles into serious doubt. What was once a promising path toward widespread EV adoption in the United States now faces a series of daunting obstacles with ripple effects that could be felt for years to come. US automakers now face a set of tough, high-stakes choices: absorb mounting losses, restructure their global operations, or double down on a domestic market that's becoming more challenging by the day. Each option carries significant risks, and none offer easy solutions. Higher production costs, ongoing supply chain disruptions, and increased tariffs all mean that American consumers are likely to see even steeper prices at the dealership. For many families, the dream of owning an electric vehicle may slip further out of reach. Without renewed federal incentives or meaningful policy support, EV sales could plunge, slowing adoption just as momentum was finally building. Dealerships may struggle to move inventory, and the industry's progress toward sustainability could stall. Meanwhile, just across the border, Canada may soon enjoy a flood of affordable Chinese EVs, giving Canadian consumers more choices and sparking fierce competition among automakers. This influx could reshape the Canadian auto market almost overnight. The result? A fragmented North American market where US buyers face fewer, pricier options while Canadians benefit from greater variety and lower prices. The contrast could not be more stark. The US auto industry now stands at a crossroads: struggle to survive, find ways to innovate, or risk losing its global relevance altogether. The decisions made in the coming months will shape the industry's future for decades. Ultimately, the outcome depends on how both companies and policymakers respond to these unprecedented challenges. Will they adapt and lead, or fall behind in the global race? For now, the only certainty is uncertainty. The stakes are high, and the world is watching to see what happens next. The global race for electric vehicles has never been more intense, and the outcome will define the future of transportation for generations to come.